Welcome to the Riskwiser zone, where we navigate the twists and turns of the financial world with clarity and insight. I'm your host, Louie, and I'm delighted to have you join us today. As we dive into the latest developments in the world of stocks and finance, we're seeing a fascinating intersection of traditional markets and the emerging crypto space. The big news this morning is the debut of not one, but several ETFs related to cryptocurrencies, including Dogecoin and XRP. The 21 shares 2x long Dogecoin ETF, listed on the Nasdaq under the ticker TSSD, aims to provide investors with twice the daily performance of Dogecoin before fees and expenses. This leveraged approach allows investors to gain exposure to Dogecoin's price movements in a regulated and exchange-traded structure. Meanwhile, Grayscale's ETF, designed to track the spot price of Dogecoin, has also garnered significant attention. The official Dogecoin handle on X reacted with enthusiasm, posting a congratulatory message, "Much congrats," alongside an image of a stylized Shiba Inu dog. This development reflects the growing interest in cryptocurrencies and the expanding range of investment products available to those looking to engage with this asset class. However, it's essential to approach these new offerings with a critical eye, considering both the potential benefits and the risks involved. XRP, for instance, has been experiencing a decline despite indications of further rate cuts by the Federal Open Market Committee, which would typically support riskier assets like cryptocurrencies. This discrepancy highlights the complex interplay between economic data, sentiment, and the inherent volatility of crypto markets. As we explore these stories further, it's crucial to maintain a balanced perspective, recognizing both the opportunities and the challenges presented by these emerging investment avenues. Whether you're a seasoned investor or just starting to navigate the world of finance, it's essential to stay informed and adapt to the ever-changing landscape. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're exploring the latest developments in the financial world, and today we have a fascinating story that's making waves in the stock market. It seems that a top Federal Reserve official has sparked a fresh rally in stocks with comments suggesting that interest rates should continue to come down. New York Fed President John Williams stated that he sees room for further adjustments in the near term to move the stance of policy closer to neutral, which could potentially lead to another 25 basis point rate cut at the December policy meeting. This news has sent the odds of a rate cut soaring, with some estimates suggesting it's now over 70% likely. The market is reacting positively, with all three benchmark indexes rising and the Dow climbing over 700 points at one point. This could be music to investors' ears, especially as they look for positive catalysts to drive a year-end surge in the market. However, it's essential to maintain a balanced perspective. Fed officials have been split on the rate cut outlook, with some striking a more hawkish tone than others. The labor market is also a critical factor, and recent job numbers suggest that the central bank may not have as much room to cut interest rates as previously thought. As we navigate these complex economic waters, it's crucial to stay informed and adapt to changing circumstances. The potential for another rate cut has significant implications for investors, businesses, and the broader economy. We'll continue to monitor this situation closely and provide you with expert analysis and insights to help you make informed decisions. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some of the key stories making headlines in the world of finance. The Indian stock market is poised for a potentially exciting week ahead, with several factors at play that could influence investor sentiment. The Nifty is hovering near record highs, and experts are weighing in on what might drive the market in the coming days. One major factor to watch is the rupee's continued weakness against the US dollar, which has hit a fresh lifetime low. This could have significant implications for Indian businesses and investors alike. Meanwhile, the IPO market is also buzzing with activity, as several new listings are set to debut on exchanges this week. The success of these IPOs will be closely watched by market participants. In other news, some experts are sounding cautionary notes about the potential risks of a market correction, given the recent run-up in stock prices. They point out that past boom cycles have often ended in busts, leaving investors to wonder what might be in store for 2026. On the other hand, others argue that the fundamentals of the Indian economy remain strong, and that the market is poised for continued growth. As always, it's essential for investors to approach the market with caution and do their own research before making any decisions. With so many competing narratives and opinions out there, it can be tough to separate signal from noise. But one thing is certain: the world of finance is always full of surprises, and staying informed is key to navigating its twists and turns. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, keep your finances in check.